Hey, what's up, traders? This is the Option Addict from over at www.tradingaddicts.com. It's been a little while since I've got up here on the old video set, but I got a couple things I want to share with you here tonight, so let's go ahead and get started. So we ended off the week with a little bit of a rally, a little bit of a fizzle, and then a little bit of a pop towards the end of the day. As far as futures are indicating right now, it doesn't really look like a Monday melt-up scenario. But really what I've been pitching as of the last several trading sessions, going back into last week, and really where I started taking off my puts was just based on this oversold reading that we have in the McClellan, which it has rallied up a little bit as of Friday's close, but we're still in significantly oversold territory. And not only that, but a lot of other things that we're looking at here are really starting to really come together. Other measurements that we're watching right now would be the VIX, with the amount of options that we're playing here and there. The VIX made a pretty interesting movement, and you'll see this line that I have here, and to go back to a 5-year chart, you'll see that towards the end of the sell-off, the bottom, go back to 2009, the March lows, that little consolidation range of volatility marked exactly where we popped to. In fact, at that time, prices kind of coiled up pretty well, and the VIX popped up and rallied right up to that point and rejected that. So I think so long as the VIX can stay at bay, and that's a pretty mean engulfing pattern that we got on Friday. That's one that I think might last for a little while. Not only that, but we're also keeping an eye on the yen, which is another risk measurement that we're watching. And so long as the trend here continues to stay down, I know the FXY, which is the instrument here that you want to watch to follow the yen, saw a lot of volume being pumped into it here as of the end of the week last week. If it can stay here, or at least start to kind of work its way back down, I think the market's set to rally. And with each of the individual sectors as oversold as they are, we've been paying really close attention to this, but right now I think you got to focus on the energy sector. In terms of bullish percent, we're in oversold territory with the reading of 26. It's not often that the group will get this oversold in terms of bullish percent, so I'm looking at this as an opportunity. The material sector, which I've kind of gone into here, you'll see that it's got a reading of 22, which is significantly oversold. Not saying it can't go lower, but the upside risks are definitely increasing. And then over on to industrials, and you look at the bullish percent here, we've got a reading of 31. So those are the three lowest as of bullish percent readings across all the sectors right now. So those are the three groups I think you want to pay attention to as just basically due to the fact that they point to the most amount of upside risk from here. So I'll keep it short and simple, guys. I mean, the way the market situation has set up here is it's not like you're going to go out and be able to really be a stock picker here. I mean, everything sold off together, everything's stabilized together, so really we're not going to see much separation right now. So in terms of my list, which I'm normally pretty gung-ho about, dip buying opportunities, rip selling opportunities, price patterns, and then small caps, I think the small cap trade should be avoided right now, at least as longer term ideas, measuring in like weeks to months. Right now I'd be looking just at big cap stocks, good, strong, quality names. I got a couple price patterns here that we'll look at, but there haven't been too many stocks that have rallied too far into last week that would really qualify for a good rip to sell. I mean, I've got a very, very small handful here, but the only thing that I'd be looking at in terms of bearish setups right now would be price patterns that suggest as much. So let me take you through a couple price patterns I've got. I've got a couple dip buying setups and a couple rip selling opportunities. We'll look at those in just a minute. We'll start right now with just a couple of classic consolidation patterns. I'll start with Clearwire, and I'll zoom this out a little bit to a 1-year chart. You can see the way prices have held up really, really well throughout this correction and have stabilized at a pretty good spot right here at support. So as an anticipatory spot to anticipate a potential breakout, I think right here is probably as good as it gets. A similar setup will be in Mentor Graphics, MENT. You can see it looks pretty similar, right? I mean, you've measured in months here, multi-month consolidation pattern, prices stabilizing at the lows, volume starting to uptick above the average just a little bit, and a decent spot to anticipate a potential breakout of the highs. I think you got to look at big cap tech stocks like old Advanced Micro Devices, AMD, down like this, down as much as they are. You can see the pattern starting to set up. It's a little bit early to start drawing it out, but I think right here is a decent reference point. BBG, which as we get over into energy, I implore you to really start focusing on the energy sector, the material sector. I like this classic consolidation pattern right here in BBG. Not only that, but I love the spot. If you can also set out these particular coiling patterns, these triangle patterns, and yet find a stock that's got a lot of volume like this, and yet down towards the lower end of its reference range towards support, that's the one that you want to be looking out for. You can also look at a stock like Key Energy Services, KEG, which has been consolidating like this for a little while. 200-day also happens to line up with this range, which you might be able to call this a triangle or a consolidation pattern because the range narrows slightly, but not that much. So I still think it qualifies. Rambus, going back over into tech. And you can see the highs up here. The stock has done a really, really good job of holding up here near its highs. And what I like about this is you can see as it held up last time in a similar fashion, the breakout was significant, enough to where you definitely ought to look towards finding an entry point in something like this. And I love the volume as of Friday. It's classic. RFMD isn't going to look all that different. To me, this looks like kind of the set of a a rounded bottom. This won't look like much of a bottom through here, but we'll give it my best. There you go. If I had more of a circular tool here to draw it out, you can see what I'm looking at. But right around the 200-day moving average is where prices have paused. I like this rounded out shape. Here, if prices start to rally from here, if volume starts to pick up, I think that's a decent spot. Analog devices, ADI. Here you can see this one in motion right now towards the lower end of its reference range. Volume really, really active in the last few days, which is what I like about this one. And last but not least, this one was a little bit heavy as of Friday, but again, upward trending stock, something that hasn't really taken too many blows as the market's rolled over here. But as prices have stabilized here, volume's picked up in the last couple days. So if they can start to perk up and rally a little bit, I do like the spot, I'll admit. And then to the downside, if you're looking at bearish setups, I would be going for low beta. Let me tell you, I'd be looking for low beta right now so that you don't get killed to the upside. But something like AT&T, where you've got a shoulder, head, shoulder, and you're trading around a neckline, and volume is pretty active around this neckline. If it holds fine, it's not something you want to short right yet, but if this breaks down and this little head and shoulder setup confirms, I think that's something you want to look at. UMC would be another setup that's pretty similar, albeit prices have already broken down here. So right now you've got a little bit of a rip or a rally up against the underside of that neckline, and if it were to hold, that's something of interest. The one thing I would be taking into consideration, though, is I don't love the idea of shorting stocks that are oversold. I'd rather let that stock rip up and rally a few points and get up a little ways. But I wanted to use this as just more as an example of a technical setup. Rack Space, RAX, and here you can see the neckline. Prices pop up about $1 or so. I think that makes sense to short into. And then last but not least, that bigger triangle pattern on NetEase that we've been following. Descending triangle, prices have already broke down. They're getting pretty close to the underside of that old support level, so I think that's a decent spot if prices can hold. Outside of that, guys, I got a couple of dip buying setups. Again, just trying to focus on quality, good names, good trends. Something like just an example, a really good sturdy trend with the level of support right underneath. Going over into energy, stock like St. Mary's. Something that's got a really good trend, something that's got a reference point, something that's got just like this. XEC, there's another example. Good trends, good stocks, good price action, and good volume on the upside. So here, take another look at my list. So that's about it, guys. Really short and sweet this week. Again, we talked about some of the measurements you want to be watching, the VIX, the yen. Keep an eye on the S&P. I'm out there. And I realize, guys, that we might see a rally up to maybe an S&P at 1150 or so, but into that, prices might start to get heavy again. So I don't think this is a load the boat type scenario where you start hitting, swinging for the fences in terms of long positions. I think into any strength, you might want to look to rebalance and try to spread things out and get a couple of bearish positions as well. It's been a pretty hectic market as of late, and we'd prefer you be protected and basically delta neutral in situations like this, just to better manage your risk. So with that, guys, a couple other announcements. This week we'll be kicking off the all-day day trading webinar. So we'll be having that day trading room open from bell to bell. So you can come and check in some of the new order flow indicators that we're working with. So far, the particular signal that we're looking for has been 16 for 16. Hasn't lost yet. So come check that out. Also, we'll be doing an open house here. I know I haven't done those in a little while, but we'll probably be kicking off another open house here in about 2 weeks. So more information will follow on Option Addict. But you guys have a fantastic week in the markets. Make sure you protect yourself. But this has been the Option Addict. That's been my watch list. Thanks for watching. Have a good one.
Bring the hook in.
I'm just a soul.